You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
I'm 21st Century Robin Hood. I'm here to take from you poor trading slobs and give to rich Wall Street firms. Yeah, apparently that is Robin Hood today. Robin Hood, the Robin Hood I'm referring to, not the Robin Hood of myth and legend in the Sherwood Forest in the days of Prince John, the brother of Richard the Lionhearted. No. I'm talking about a totally new kind of Robin Hood. The Robin Hood that's got millennials just chomping at the bit to go into debt up to their eyeballs. Yes, because, once again, experience. Experience is so important. I need to tell you something before I tell the story of Robin Hood. It was in the New York Times today. A great story on the reality of the new Robin Hood. This is a message for all of you, but primarily you millennials who think you're going to get rich quickly. Listen closely. You're not. All right? You're just not. Oh, and Robin Hood, the brokerage firm, encourages people, encourages them to go into debt, to literally gamble with their money. We've had calls from people. Well, my friends have just sunk all their money into Robinhood. It's an addictive casino. But it is a casino. And it is not a good place for anybody to play with their money. It's incredibly dangerous. Now, Robinhood has gotten in trouble in the past. They, not too long ago, were fined by the SEC $1.25 million because of the way they make money. Now, you know the big story of Robinhood is the fact that Robinhood gives you free trading. You can even do fractional share free trading. You can borrow money. You can play options. Oh, doesn't that sound attractive? It does. It does. To people who think that is what investing is. Oh my gosh. So, like the guy in this story from the New York Times, a gentleman from San Diego, a Navy medic who borrowed against his credit cards and then borrowed against his house, hoping that he'd be able to get out of debt and get ahead. He borrowed $45,000. And for a little while, he lived the dream. He got lucky. He was in at the exact right time. And his account value, because he was leveraged, because he was using the leverage of options. You see, when you buy options, you don't have to put as much money in, but you get the return of the stocks over a short period of time if they go in the right direction. If not, you lose everything. Well, for a while, this gentleman's portfolio did exactly what he wanted it to do. It soared to $1 million. Wow. Would have been a happy ending, but what do we do when things are going well? What do gamblers do when things are going well? Oh, let it ride, let it ride, let it ride. This week, this gentleman's account dropped to under $7,000. And his wife said he's totally obsessed with it. Totally obsessed because it is addictive. Gambling is addictive. And this is no different than gambling. As a matter of fact, Robinhood is designed to suck you in like a video game. But it's a video game that costs thousands of dollars to play, tens of thousands, in some cases hundreds of thousands, or even, in this case, more than $1 million to play. People have committed suicide because of Robinhood. Suicide. And get this. In the first quarter of 2020, according to the New York Times, Robinhood's users traded 40 times as many shares as did customers of Charles Schwab. They played 88 times more options contracts than the behemoth Charles Schwab, the biggest of the discount brokers. They're sucking people in, and it's an evil empire. It is an evil empire in that the customers aren't getting rich. The company is getting rich because you're thinking, how do they get rich when they don't charge for trades? It's a little thing, and this is what they got in trouble with the SEC about. It's a little thing called payment for order flow. It's in the industry. Everybody does it. You know, if a firm wants to get a lot of trading volume, they'll pay a couple of cents per share to somebody else to send them trades. However, when you do that, you also kind of get to set the price, the bid and the ask. You can play with the spreads. And that's what Robinhood got in trouble about, is that they were dealing with firms that the SEC said may not have been giving the clients the best execution. Interesting how that incentive can really mess up pricing. And I'll give you an example. You see, Schwab pays other firms for trade, or gets paid for sending trades to them. But Robinhood gets paid 100 times more than Charles Schwab on a per dollar basis for those trades. 100 times more. Now, why do you think firms would be willing to pay Robinhood 100 times more than they'll pay Schwab for those same kinds of trades? Because they know they can take advantage of the stupidity. Sorry, you guys. I'm sorry, but I got to say this. You know, sometimes the truth hurts. They can take advantage of the stupidity of Robinhood's average client. And it is absolutely dumb to trade options. It is no different than going to a casino. It is really, 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 really dangerous. Ashton Kutcher, the actor, who is a Robinhood investor, attended a meeting recently on Zoom and compared them favorably to the big money that the companies who run gambling websites made. Yeah, they found a way to get rich off of gamblers, but it's legal gambling. It's legal gambling. Now, of course, they claim, we don't let just anybody trade. No. They do not let beginning investors trade options. Because they ask you some questions at the beginning, and there's little buttons, and one of them says, how much experience do you have investing? And you say, I don't have any, sir. Thank you. Click. Oh, you can't trade options. But here, we'll send you a little video that shows you how to invest. Now go back and push the not much button, and you can trade options now. There's more. There's a lot more. But the fact of the matter is, this is not investing. Oh, I know. That makes me the old fogey who's telling you that you shouldn't do the newfangled things out there. I know it's just old people talking. But let me tell you something. There's a lot to be said for experience. I've been around for a while. I've played options. It was stupid when I did it, and it's stupid when you do it. Leverage. It's wonderful when prices go up. It cleans your clock when they go down. If you know someone who's a Robinhood trader, I am totally serious about this. Get them help, because odds are they have a problem. We'll talk more about this. I'd love to hear from some of you who've dealt with Robinhood and have had good or bad experiences. I'd just like to know what drives you, what makes you want to do this, and have you had success? And by the way, for those of you who said, I've had huge success, I've never lost. I know people lie a lot. So if you claim you've had huge success, I'm going to be very skeptical. And if you want to prove that, well, go to talkingrealmoney.com and send me a redacted version of your brilliant trades, okay? Because I don't believe it. The fact is, study after study after study says people who trade stocks, and the more they trade, the worse they do. But people who trade stocks don't make money. They don't. The math's against it. It's not going to happen. Our number, 855-935-TALK, 855-935-8255. You can call that anytime, 24 hours a day, 7 days a week. By the way, just a quick note, next week I'll be appearing on Stacking Benjamins, the podcast. So I hope you'll listen to that sometime next week. And give us a call anytime, 855-935-TALK, 855-935-8255. Just leave your question. We'll answer it on the podcast, or type it up at talkingrealmoney.com, and we'll answer it on one of our future podcasts. And by the way, I was just checking the call vault, and we're running a little low on calls and questions. So you're going to get your question answered a lot faster than some people have in the past if you call it in now to 855-935-TALK, or send it to talkingrealmoney.com. Let's just do one. Yeah, this far in. Let's just do one phone question. It's a short one.
Hello, this is AJ at Colorado. I have a question on 3 bonds at Vanguard. They're ETFs, and the first one is VIV, Intermediate Term Bond, and the other one's BLV, Long Term Bond, and the third one is BSV, Short Term Bond. What is your opinion on using those as my retirement fund? Thank you.
Well, you didn't give me a lot to go on, but good choices for bond funds, generally speaking. I hope that they're not going to be your only investment. Bond funds should be a part of your portfolio, not the entirety of your portfolio. You need to have some assets and equities and a diversified portfolio of equities through either ETFs like VT or through their funds. But of those 3 funds, there is only one I would not use. And that is the BLV, the Vanguard Long-Term Bond ETF. BLV, while it has the best yield of the 3, it's not great, but it's 2%, a little over 2%. The problem with it is the high degree of volatility that comes with long-term bonds. The volatility is not rewarded in stability, and we believe that bonds should be in a portfolio not for the return, but for the stability they provide, so that you can have money in equities where the returns are commensurate with the level of risk being taken. The returns are not being the risk you're taking in a long-term bond fund, I should say, is not being rewarded by the higher returns. However, The Vanguard Intermediate Bond ETF and the Short-Term Bond ETF have pathetic returns, but their degree of stability is very high. So they're appropriate investments. They would be the top of my list, near the top of my list. Fees are really low. Yields are fair. They're market-based. They're index-based. And thanks for the call. And remember, you can call anytime. 855-935-TALK, 855-935-8255. And also, we've got a new class. I'm redoing the science of retirement investing, trying to do it in a shorter class with a lot of new information. We're going to do it as a Zoom class on the 20. Oh, I need to look at my calendar. I'm going to say the wrong date. 29th of July, which is a Wednesday at 8 a.m. Pacific, 11 a.m. Eastern Time. It's totally free, and you can sign up for it at talkingrealmoney.com. That's also the place for lots of good information. Also, check out the new Vestory website at vestory.com. That's our investment advice firm. And thanks for listening. Tell a friend or two or 1,000, and we'll talk at you soon. I'm Don McDonald.
Talking Real Money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately, consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor.
Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures.
That should keep the lawyers happy.